Good morning, everybody. It is Tuesday, September 6th, 5:48 a.m. Central as I speak here. December corn futures up 1 at 666 and a quarter. November soybeans down 10 and a quarter at 1410 and a quarter. December Chicago wheat down 5.5 at 805 and a half. December Kansas City wheat down 2 at 875 and three quarters. December spring wheat up 1 and three quarters at 891 and three quarters. Hope you guys had a nice long weekend. Remember, if you are listening on the podcast, do me a favor and leave me a review on that Apple app if you wouldn't mind. I could use some more reviews there. If you're watching on YouTube, guys, subscribe to the channel, like these videos, leave me a comment of any kind if you have an opinion about what I say here, some thoughts on this stuff, crop update for me, leave them in the comments. I look at all of them, and those comments very much help YouTube to help me to grow this channel. If you'd like some additional information from me, go to my website, guys, www.standardgrain.com. Check out my premium subscription service today. I send my premium subscribers a ton of information direct from me every single business day. Morning email goes out about 5:30 a.m. Central. In that email, you'll see every overnight headline you need to be aware of. Charts, graphics, lots of weather info. My daily subscriber-only videos are part of this deal. I've been accused in the past of not talking about the wheat market enough, so I talked about wheat in Friday's video. I ran through SRW, HRW, and spring wheat, tried to identify some potential recovery targets if such a recovery should occur for the purposes of grain marketing, cash sales, that sort of thing. If you guys are interested in this sort of content, sign up today. $50 a month, cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, I promise. Soybean farmers in Argentina will be privy to a special exchange rate. The country's economic minister announced Sunday a special exchange rate for the country's soybean producers in order to incentivize exports, shore up central bank reserves, and avoid currency devaluation. In Argentina, soybean farmers and exporters of all types have been known to hoard soybeans as an inflation hedge because inflation in Argentina is running at an annualized rate of 70%, which is the highest in 20 years. They've just got runaway rampant inflation in Argentina. The country's central bank recently hiked its benchmark rate to about that same level, 69.5%, in an attempt to control inflation. So soybean exporters will now be able to sell dollars from their shipments abroad at a rate of 200 pesos per dollar. The official rate is 139. This could result, I suppose, in some additional soybeans on the global market during certain periods, although I don't think it's a game changer. I think this is an interesting story, to say the least. Argentina has been taking a number of measures here as of late to reduce inflation. Back in early August, Argentina's economic minister vowed to stop printing money and outlined an economic roadmap that included a whole bunch of measures. So that's the bigger deal here, is that Argentina just has massive currency failure, basically, largely as the result of money printing and other things. So maybe this is just no more than a cautionary tale to maybe some of the other central banks out there regarding money printing and easy money policies and that sort of thing. In regard to the soybean market, does it really matter at this point in time? Probably not. Large money managers continue to add length in the corn market. CFTC released its weekly Commitment of Traders report on Friday. This data is accurate as of Tuesday, August 30th. So large money managers, or the funds, they bought 29,000 contracts of corn in the week ending last Tuesday. They're back up to about 205,000. That's the net long. That's a large net long. It's not extreme from a historical standpoint. Funds were net sellers of about 7,000 contracts of soybeans and bought back some SRW wheat to the tune of about 5,000. So this is just a modest net long in soybeans. This is getting to be a larger net long in corn, modest net short in the SRW wheat market. Weekend rains fell over some of the eastern corn belt, the mid-south, and the southeast. Some of Illinois caught some rain, some of Indiana, some of Ohio. There's some heavy stuff in southern Indiana into parts of Ohio, Kentucky, Tennessee, North Carolina, down into the southeast. Western corn belt, Iowa, mostly dry. Minnesota, the Dakotas, Nebraska, Kansas, Oklahoma, and Texas with some maybe scattered rain. Next 7 days, let's look at the radar first. Radar very quiet here this morning. There's a system just exiting the East Coast, but other than that, there's nothing over the Corn Belt, nothing over the plains here early this morning. Next 7 days favors rains again over the eastern Corn Belt, southeast part of the country, much drier by comparison for central, western areas of the Corn Belt, along with the plains. I mean, maybe there will be some areas that catch a tenth or a half here in the Dakotas or Nebraska or Iowa, but it's not going to be any sort of big sweeping system. 6 to 10 looks drier than normal potentially for a lot of the Corn Belt and central and western areas in particular. Temperatures continue to trend above normal. I was looking at the GFS run this morning, which indicates temperatures in the low 30s are possible in parts of Michigan, Minnesota, and Wisconsin around September 18th. It would be like the central to northern parts of those states, and that would be a slightly early first frost date for those areas. And again, that model's a ways out and may not be accurate, but around September 18th is where I'm seeing some stuff that could be like frost type potential, but it's like low 30s and not like into the 20s or anything like that. So just something to be aware of. Farmers in the Ukraine have started winter wheat planting. The first acres of the country's winter wheat crop that will be harvested in 2023 were planted recently, according to the country's ag minister. The minister has not provided an official crop forecast, although he did say that acreage may fall by 20% versus last year. Last week, a Ukrainian farm group estimated that winter wheat acreage would decline by 30 to 40%, and they believe that next year's winter wheat harvest could decline by more than 50% versus pre-invasion levels. So, they've got the export program going to some extent, but production is going to be off by more than half, according to one group at least, when it comes to winter wheat in that 2023 harvest timeframe versus your pre-invasion type levels. Gasoline prices continue to decline. The national average retail gasoline price hit $3.78 today versus $4.08 last month. The all-time high was $5.02 back in June. The national average gasoline price in the United States has now fallen for 11 consecutive weeks. Some analysts expect additional price weakness through November. They warn, however, that prices could spike if you have weather or hurricane-related production issues. OPEC agreed to a small production cut over the weekend. Crude oil trading kind of mixed this morning. Spot month WTI trading around $87. The cattle market finished mostly higher in futures, both live cattle and feeders on Friday. There was some cash trade, mostly 141 in the south, 143 to 144 in the north. In the outside markets, the dollar's higher. The S&P's up 27, the Dow Jones up 200. Bonds are off a little bit. Precious metals mixed. Crude oil is down 47 cents in the October WTI at 86.38 last trade. Have a great week, guys. I'll talk to you tomorrow morning.